Today we are going to be talking about classification of accounts. So let's look at the learning objectives. Let's look at the learning objectives. Let me share my screen with you. Okay, classification of accounts. The learning objectives. At the end of the lesson, students should be able to list the classification of accounts. That's number first learning objective. The second learning objective is to state the meaning of different classification of accounts. Third one is give examples of different classification of accounts and classify series of accounting items into their various classes. Now let's go into the business. Account classified based on two approaches. First, we have the British approach, also known as the traditional approach, and we have the American approach, also known as the modern approach. It depends on the country you are that will determine your approach or the approach you adopt in the classification of accounts. For example, here in Nigeria, we know that we have a British background because we were colonized by the Britain. So basically, most of our accounting classification will be based on the British approach, but that doesn't mean that we cannot learn something about the American approach. Okay, the British approach, also known as the traditional approach, classifies accounts into two two classifications. The first one is personal accounts, while the second one is impersonal account. Personal account and impersonal account. What are personal accounts? Before we move to impersonal accounts. When we say something is personal, that means we mean it belongs to an individual, right? So it's just a translation, just semantics. So personal accounts are accounts for individuals, persons such as customers, creditors, debtors, and others that have relationship with a business entity. So the account of names, whenever you see the name of an individual mentioned, you know that it's a personal account. For example, you can say Musa's account, Adibowali's account, Christiana's account, all those are personal accounts. This is incumbent. A vivid example given here is this. Olapor supplies cosmetics for Badmore stores. It's important for Badmos to open a personal account for Olapor in his own book of accounts. In that way, Olapor, any transaction that occurs between him and Olapor, we know that yes, he has an account. He has already opened an account in his record. So the account will show the flow of transaction between between two of them. So in this case, we know that in the book of Badmos, Olapor is a creditor to him. So because he bought Olapor supplied goods to him, so he's a supplier to Badmos, and Badmos has not paid him, so he becomes a creditor. So accounts of creditors and debtors. So in as much as their name has been mentioned, you should know that they are personal accounts. I think that is clear. Now let's move to impersonal accounts. Impersonal accounts are subdivided into two, two, two classifications, sub-classification rather. We have the real account and we have the nominal accounts. What are real accounts? When you say something is real, that means it's tangible, right? So you can say accounts for assets of a business are referred to as real accounts. Sometimes They are also called permanent accounts because they are permanent in nature. You actually feel them. So account for fixed asset, sorry, account for fixed assets are real accounts. Let's say example of fixed assets, furniture accounts, machinery accounts, cash account. So cash account is not a fixed asset anyway. Cash account is a current asset, but account for assets generally are real accounts. Either it is fixed, whether it is intangible, or they are current assets. They are classified under real accounts. Okay, that's that about real accounts. Now let's look at nominal accounts. What are nominal accounts? These are also divided into two. There's an account for income and account for expenses or expenditure. So our income and expenditure accounts are nominal accounts. So they are referred to as temporary accounts also because they change. They are not static, they are not permanent in nature. The amount of rent for this year is likely to change from what you are going to pay next year. So this is because they are closed at the end of accounting period and have a zero balance at the beginning of the next accounting year. Purchases, rents, sales, discounts, insurance accounts are examples of nominal accounts. Now look at the modern approach. The modern approach is more or less the same with the traditional approach. It's just that the classification is different. So under the American approach, also known as the modern approach, accounts are basically classified into five. We have asset accounts, liabilities account, income account, expenditure account, equity, also known as capital account. So we know what assets are. So assets, just like real accounts under personal accounts. So liabilities account, what the business is owing to external individuals or external entities. Those are liabilities, income, expenditure, equity, that is capital. So that's that, the classification of account. This is a very simple topic which you can actually look into and understand it with this video. And I hope that by the time you look check on this video again more than 2 or 3 times, you will get to understand it properly. Thank you.